For us, Bitcoin is very clear. Like that's just a start. Like we are barely scratching the first surface of what's even possible with Bitcoin. Even when we think about strategy and when we think about publicly traded companies, it's fascinating for me. And I'm curious what you say on the publicly traded companies, because I actually overestimated how fast this will go with companies. We had strategy laying out the plan, the game theory, the blueprint in 2020. It's now over 5 years ago that strategy did that. And I thought like, this is a publicly traded CEO that has not Bitcoin related business, that has done that in a very aggressive way. I thought this makes more waves into the CEO and CFO sphere than it did. And now we have 150, 160 publicly traded companies.
Something like that, yeah.
Something like that are into Bitcoin. That number is super low. And even if you look at that list, how many Bitcoin they have, it's laughable. Like they could have so many more. So I think we have now slowly started the institutional adoption. We have no institutional adoption. Still, like I feel like we're at the very beginning of that wave.
Oh, we are. I would agree. So I want to touch on something you talked about with people saying that Bitcoin is a mature asset. I want to draw a distinction between a mature asset and a maturing asset. Gold is a mature asset. Bitcoin is a maturing asset. And the reason why I say that is because let's just take a look at what's been happening since the BlackRock Fidelity ETFs launched, right? Price has been ticking up very, very steadily, but volatility has been going down very steadily. That's not a bad thing. What that means is, and this is part of the what I call the stairway to heaven, I think that Bitcoin's days of 80% drawdowns are over. I think we will see 30%, 40%, perhaps if something really drastic happens, 50%, but I don't think we're going to go from, like 160 or 200,000 all the way down to 80 or 75 or something like that. I don't think that's going to happen, because when you have a maturing asset class, you bring in different investor bases. So kind of like what you touched on. We have the institutions in BlackRock, we have the corporates, right? That's creating a new investor base. And to your point, the ETFs hold more Bitcoin now than collectively than Strategy and all the other Bitcoin treasury companies. Now, some can say that's a risk. I don't think it's a risk because, publicly traded companies, they have a lot of ways to survive market drawdowns that an individual investor doesn't have. So we are more likely to see individual investors want to run for the exits quicker than corporations, because corporations have a lot of ways that they can keep the lights running. And that's just a very general overview. We can go into more details on that later if you want. Now, coming to your point, we are very early, and I think this is going to go in phases. If we had, tens of thousands of corporations adopting Bitcoin treasury strategies right now, I would actually be concerned. I would think that's a mania phase. I would think that is a little bit overheated in terms of the interest, in terms of the investment, so on and so forth. However, the fact that we had Strategy, then we had Semler Scientific, then we had Metaplanet, and it's been kind of ticking up. And early in the year, we had a period where it seems like there was a new one announcing every week. I think that's good. What we're seeing right now, I don't think is a bubble. I think it's an early adoption curve. And people need to realize that business is business, and there are going to be some of these companies that are going to fail. That's just going to happen. And when I say fail, I don't mean that the company is going to go bankrupt. I mean that the companies are going to abandon the treasury strategy. I wouldn't be surprised if in the next 36 months, aka 3 years, we see a few of these companies decide to abandon their treasury strategy. Now, that doesn't necessarily mean they're going to sell their Bitcoin. They can simply say, we have 500 Bitcoin, 1,000 Bitcoin, whatever. We are no longer going to be active accumulators. That doesn't mean that they're going to say, we have 1,000 Bitcoin, we're going to market sell. Those are two different things. So with what you're discussing in terms of it's such a small amount, you're right. The number varies, but when it comes to globally traded companies on all of the global markets, I think the number is something between 45,000 and 52,000. companies globally that are traded publicly in all the global markets. So that's, the US market, the European market, the UK market, the Asian markets, so on and so on and so forth. So the fact that we have under 200 right now is like 0.002% or something like that in terms of adoption for corporates. So what that means is if we ever get to the point where we have 5%, just imagine what that means. And I think that's where we're going to go. I don't know if we're ever going to get 100% in the next several years, because in terms of, every single company in the world has Bitcoin exposure, similar to how every single company in the world has exposure to their local currency. So, for instance, every U.S. company has U.S. dollar exposure. Every German company has exposure to the German or the euro dollars. Japanese companies like Masterplan have exposure to the yen. I don't think it's going to reach that saturation level. I think that what we'll see is a percentage, a real percentage. However, 100 years from now, I don't know what's going to happen. In the next 10 to 20 years, I think we can see 1 to 5% corporate adoption of Bitcoin on the balance sheet, which would represent exponentially more companies than we have right now. And I think that's a good place to be. We don't need the Mag 7, but if we get a lot of share, or relatively a lot of share in smaller companies, like mid-sized companies and smaller, I think that's fantastic for Bitcoin.
That's really interesting. And I just looked the numbers up, and it's really, really low. Because we have, according to the Google, 53,000 publicly traded companies worldwide.
Okay.
And even if you go with 200 publicly traded companies, that's 0.37%, which is like nothing compared to Bitcoin. And then also the further step of like, what is an appropriate amount of Bitcoin that a company has to have to being considered having adopted Bitcoin. Because I would argue that Tesla could buy a whole lot more of Bitcoin. I think they have like 9,000. They could buy hundreds of thousands of Bitcoin. I mean, of course, if they would do that, that would probably jack up the price. That would make it harder for them to acquire it and all of that. But what they have on the cash balance and what they have as possibilities for financial things, the 9,000 Bitcoin do that is almost nothing. That's like 0.01 Bitcoin to the average person, where you're like, oh, you can get more than that. So I don't know. It's an interesting topic, and also like this discussion of what we talked about before. I found really interesting, this maturing and mature asset. What would you say is the indicators or like the potential that Bitcoin needs to reach to classify it as an mature asset?
So, and this is what where I disagree with some Bitcoiners. They think that volatility is going to remain as Bitcoin scales, and I think that's true. However, I think it's going to decrease. So, in my view, Bitcoin as a maturing asset class going to a mature asset class. If we think about hyper Bitcoinization, right? That's the number that's the number where Bitcoin has enough market cap to serve as the base layer for a true new financial system. Whatever number that is. Some people say $1 million, some people say $5 million, some people say $500,000. But hyper Bitcoinization has a number to it. And it just depends on what that number will be. However, hyper Bitcoinization as a concept, I think, doesn't work if Bitcoin is doing this. We need to have stability. So what that ironically means is Bitcoin will need to be less volatile, but increase in market cap. And that's what we're seeing right now. We're seeing the early days of that. So typically when a equity or asset grows in market cap and grows in adoption or grows in holders, it doesn't grow in volatility, typically. So what that means is it's going to grow to a certain market cap. It's going to stabilize. We'll have some sellers. We'll have some volatility. Then it will equalize. Then it will grow again. But at some point, when Bitcoin reaches mass adoption, it's going to reach a market cap, and it's not really going to vary from that much. So let's say that the market cap is, let's say, I'm not saying this is what it is, but let's say it's $10 trillion, right? I don't think we're going to see the market cap go from 10 trillion down to 7 trillion and then back up to 11, right? I think we can see the market cap go from 10 trillion to 9.6, maybe 9.5 if there's some market volatility, but then go back up because of the nature of Bitcoin being a finite asset. And unlike gold, which is scarce but not finite, Bitcoin is scarce and finite. So I think that creates different dynamics where you'll always have buyers and sellers, but because there's not more Bitcoin being issued, there's just going to be a set number circulating. I think that does create an equilibrium point where Bitcoin is going to get to a number, it's going to stabilize, then get to another number and stabilize, and get to another number and stabilize. I think that's what the future holds for Bitcoin. But with that is going to be decreasing volatility. And decreasing volatility doesn't mean that, returns are going to go down to zero. It just means that instead of, an annualized average rate of 30% a year, it might go down to 20. It might go down to 15. You'll have periods where when adoption perhaps grows, where adoption picks up, where it can go to 40, and then down to 15. But it's going to be more like digital gold, in my view, long term, than a highly volatile asset that's going to have boom and bust cycles. So that's what a mature asset to me means. It reaches a point, an inflection point, it stabilizes, and it reaches a new point and stabilizes. And I think that's what happened with gold. If you take a look at gold's history, and I think that's what's going to happen with Bitcoin.
I do agree. And I think a lot of, and because there's a very important distinguishing point in there for me, it's like, what do you measure Bitcoin in? Because if you measure Bitcoin in a hyperinflated currency that is soon going to die, and I think that's what a lot of Bitcoiners make that point, that say like, the dollar will end. And then if it's hyperinflates, there's like a lot of volatility in there, which I'm like, yeah, but the volatility in a hyperinflated currency is then in the currency, not in Bitcoin per se. And that's what I think, that this is what the charts, they usually also bring up. And I think I also showed it once, where you had the hyperinflation in Germany, I think like 1930, something like that. And you saw the gold price, and the gold price was like massively up and down each month in the hyperinflated currency, but not the gold purchasing power. It was more about the currency and less about gold. And I think that this is a similar thing that can or could happen with Bitcoin. If you measure it in your local fiat currency and your local fiat currency goes to shit, yeah, it might be volatile, but not Bitcoin itself.
Yeah, I agree. And it's all about the denominator. So, and that's the thing that people need to be aware of. And I also think there's something that Bitcoiners need to be aware of, in the sense that they don't get tunnel vision. One of the reasons why I'm so bullish on AI is because, yes, it's denominated in fiat, but what do you buy Bitcoin with? You buy it with fiat. So the more fiat I have, the more Bitcoin I can buy. Everything that I have is going to eventually rotate into Bitcoin, right? So, to your point with regards to, yes, if you measure things in terms of dollar value, it looks crazy. But I think it's Leon Wonkum that does a lot of the work on Bitcoin and real estate, and I don't know if it's him that created that graphic. But have you seen the graphic where it says a house used to be 10 Bitcoin, then it went 5 Bitcoin, then you see it was like that? Now, even with Bitcoin's volatility, if you have that benchmark of a house, the purchasing power of Bitcoin has been going up while the value of the house relative to Bitcoin has been going down. That's what we're going to see. We're going to see the purchasing power of Bitcoin going up, and the fiat currency is denominated in, whether that be in Germany, Japan, or the US, there's going to be a lot of gyrations, but Bitcoin itself is going to keep ticking up. And I think that's what we're going to see represented in the price, which is why I believe that, ironically enough, the higher Bitcoin goes in market cap and price, the more stable it will become. Because I actually think that the boom bust cycle in the past, people, correlated to liquidity, people correlated to the halvings or whatnot. I don't think those were the cause. I think those were just coincidental correlations. I believe what was causing the boom bust cycle in Bitcoin, if you take a look at it from its inception to about 2022 was actually stimulus. We had global economies printing a lot of money in those timeframes, and to the tune of trillions and trillions and trillions of dollars. And in my view, liquidity seeks quality while stimulus seeks speculation. And I think what we were seeing in the speculative boom bust in Bitcoin wasn't because of the halvings, and it wasn't purely because of the liquidity in the markets. It was because of all the stimulus that was in the markets. And if you correlate that to what has happened since the ETFs have launched, we've had a higher interest rate environment, because in a stimulative environment, we had interest rates that were close to zero. We haven't had money printing to the level that we saw in those stimulative environments. And Bitcoin, since the ETFs, has been ticking up. And that comes back to my point about creating a new investor base for Bitcoin. The institutions represent a fundamentally different investor base, because it's not BlackRock and Fidelity that's buying the Bitcoin on behalf of themselves. They're buying it on behalf of their clients. And their clients are saying they want to hold Bitcoin. Their clients are saying they want Bitcoin exposure, which is causing BlackRock to buy and Fidelity to buy and all the ETFs to buy. That is a different investor base. That is not a speculative investor base. That is what they call sticky money. Sticky money is money that stays around for a long period of term, while hot money is speculative money. They're the ones that rotate in and rotate out. So this all coalesces to my overall thesis as to why I think that as Bitcoin scales in market cap, it's going to decrease in volatility, and it's going to become a more mature asset class. But it's not mature yet. It's maturing.
That's really interesting. And I think those charts very popular. I bring this up quite a lot in the podcast, actually, because I think it's such an amazing example when we make it with the house, as we made it in the beginning of the point, where you have, I don't know how it's in America, but I assume it's similar. In Austria, you have all the people agreeing on, like real estate is a great investment. It just goes up over time. And it's always funny when I ask people, like, why is real estate going up? Like, if I buy a house now, 10 years later, it looks a lot worse. Like, it's not as good anymore than 10 years ago. But for some reason, the whole thing is more worth. Like that does not make any sense on a fundamental basis. But it goes up because the denomination is going down. So the US dollar, the euro, whatever you're calculating it, is going down. And then if you flip it and price it in Bitcoin, and this is just a chart from it started in 2011, and it goes down. Like, we had 2013, US median house cost like 2,300 Bitcoin. Then 2021, we had 7 Bitcoin. And now we are down to 4 Bitcoin, which kind of shows the projection. I just wanted to add this in there because I think this is a brilliant point, and this is a point that get people thinking when they hear about Bitcoin, when they hear about real estate, and when they hear about the whole money printing thing.
So what's really great about that chart, and I think Leon Wonkum has talked about this, and this is something I'm really coming to realize myself. I think that when 1 Bitcoin equals 1 average house, that's going to be a real inflection point where people are going to say, what? 1 Bitcoin is worth what the average U.S. house or the average Austrian house or whatever house. I think that is going to be very interesting, because you will have Bitcoiners that, and let's just think it through. This is the way I think it through. In that world, I'm not selling my Bitcoin to buy a house. I'm taking out a loan against my Bitcoin to buy the house. So I think it creates a new parity in terms of what is a good investment, right? Because as you said, everyone agrees almost globally that real estate is a great investment. It's going to go up. It's the best investment you could make. That's because the value of your money is going down, not because of the real estate going up. However, imagine a world where you take out a 30-year mortgage backed by Bitcoin, which will give you a lower interest rate, which will give you the money to buy the home. Your home goes up in value, but the Bitcoin goes up in value more. So you end up winning on both ends. You end up taking out a loan that functionally is worth less and less to you for an asset that's going up in value without actually losing the principal asset that you used to buy the home in the first place. So the capital outflow relationship becomes very, very different. It becomes a collateralized model versus I have to save up tens of thousands or hundreds of thousands of dollars to put it down on this home, take out a loan that I'm paying interest on, and then buy the home. And the funny thing about it is, you don't own your home even when you pay it off. At that point, you're renting the land, because I'm sure in Austria you have property taxes. So if you don't pay your property taxes, they're going to seize your home. So is the home really yours? I think that these are all the kinds of changes that are going to come in terms of how people relate to money because of Bitcoin. I have my Bitcoin in cold storage. Yes, I have iBit as well, but I have my primary principal holdings of Bitcoin in cold storage. No one can take that from me. And I can take that with me wherever I want. That is true ownership. That something that cannot be seized from you. Your home, even though you buy it, can be seized. And I think that maybe this is me being overly optimistic, but as people become more and more aware of Bitcoin, and people become more and more aware that it's really property that is one of the, I'm not going to say it's impossible, but it's nearly impossible to take from you. Does that cause a repricing of a bunch of other valuable assets? Does it cause a repricing of real estate? Does it cause a repricing of art? Does it cause a repricing of other collectibles? Because, there's scarcity, there's rarity, then there's ability for it to be seized.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.